Welcome to the deep dive. We're looking at some really interesting source material today. A guide, actually.
Yeah, a guide focused squarely on trading. It's titled, 6 Things That Separate the Pro from the Amateur Trader That You Can Change Right Now.
Catchy title. And our mission, really, is to pull apart those core habits. The mindset stuff that this guide says makes the real difference.
Exactly, cutting through the usual noise about, needing 6 monitors or something.
Right. The guide kicks off making that exact point. It argues, pretty strongly, that the gap isn't about the gear, the software, none of that.
No, it's about the approach, how a trader thinks, how they act, their routine. That's what we're digging into.
It suggests these are things anyone can work on, which is,
Yeah.
well, encouraging, I suppose, actionable insights.
Absolutely. These aren't secret handshakes. They're disciplines, ways of thinking you can adopt.
Okay, so let's jump in. The guide outlines 6 key areas. Point number 1, maybe the most obvious, distractions and focus.
Yes, the amateur trader. The guide paints a picture, and it feels, pretty familiar maybe for some folks.
Totally. Trading, but also scrolling social media, checking emails, maybe you got the TV on in the background.
YouTube, chat groups, news feeds, buzzing. Attention split everywhere but the charts.
And the result is predictable, isn't it? You lose focus, you're juggling too much.
And you miss things, miss a potential setup. Or worse, make a silly mistake like a calculation error or hitting the wrong button.
Just because your head wasn't fully in the game.
But the pro, according to this guide, completely different. When they're trading, it's like tunnel vision.
100% focus, it says. Just charts, platform.
Yeah.
Maybe news, okay, but...
Been on mute, maybe, or checked between intense periods, not constantly interrupting the analysis. It's intentional.
And here's a key bit.
Yeah.
The pro knows trading isn't about staring at the screen 24/7.
Exactly. If there's no valid setup based on their plan, or the market's just dead slow.
They step away, turn off the platform.
Right. Use that time productively. Maybe work on skills, review past trades, analyze performance.
Or just take the day off. They aren't glued there, feeling like they have to be watching.
It's fascinating, that active avoidance of distraction and knowing when not to be glued to the market.
So for you listening, it makes you think, why is that absolute focus so critical? And maybe how can you spot your specific trading distractions and, get rid of them?
Yeah, actively eliminate them. And that lack of focus often bleeds into the next point the guide makes, which is about wasting screen time.
Ah, okay. So it's not just being distracted, it's how you use the time when you were looking.
Precisely. The guide describes the amateur spending hours just staring, watching the charts wiggle.
Flipping through time frames, maybe? Just sort of hunting for something, anything.
Yeah, hunting randomly. Driven by this, flawed idea that more hours staring equals better trading, without a real plan guiding that time.
But just passively watching charts without knowing what you're looking for,
Yeah.
The guide says that's basically dead time. No real value.
Real though.
It's just screen time, not productive analysis.
Yeah.
The pro, on the other hand,
Operates differently, I assume. Totally. They have a detailed trading plan, often written down. They know exactly what setup they're looking for, what conditions need to be met.
on specific instruments, maybe even specific times of day.
Right, so they're not randomly flipping. They are patiently waiting for their predefined conditions to show up.
And when things are quiet, no setup visible.
They're not just zoning out watching candles form. They're likely doing something valuable, like reviewing their trading journal.
Ah, the journal, looking at past performance,
Yeah.
analyzing the data.
Exactly. Finding concrete ways to improve based on what actually happened in their past trades, using that downtime constructively.
So it boils down to a structured process versus just random activity hoping for the best.
Absolutely. Which raises the question, do you have a trading plan, a real one? And do you actually stick to it? And what do you do in that idle time? Is it review or just staring?
Good question. Now this next one, this gets into the head game. The guide talks about overconfidence after a winning streak.
Oh, yeah. This is a big one. The classic pitfall.
So the amateur racks up a few wins. Maybe a good day, a good week.
And suddenly they feel like they've got the Midas touch, right? Invincible.
Yeah, they think my strategy's perfect, or wow, I'm just naturally gifted at this.
And the danger there is, what happens next? They start getting reckless.
Taking bigger risks than usual. Oversized positions.
Or, and this is maybe the worst part, they start bending or breaking their own trading rules because they have a feeling, a gut instinct that they can't lose this time.
And the guide points out, This is where it gets really interesting, how fast that unravels.
Oh, incredibly fast. That overconfidence, that rule breaking, it often leads directly to giving back all the recent profits.
Sometimes even more, right? Wiped out by one or two bad ego-driven trades.
Exactly. Whereas the professional, they understand winning streaks are just part of the probabilities. Normal statistics?
It's not a sign they've suddenly become a trading god.
Not at all. And crucially, they don't let that success mess with their process. They stick to the plan. Always.
Always follow the risk management, the money management rules, no exceptions.
Right, so that when the losses inevitably come, because they always do, it doesn't blow up their account. It doesn't erase weeks of work.
That's discipline.
Yeah.
So, thinking about yourself listening, how do you react after a good run? Feel that urge to ramp things up, get cocky, or stay grounded? That's a telling sign.
It really is. And then there's the flip side, equally damaging. Loss of confidence after a losing streak.
Okay, so the pendulum swings the other way. Losses pile up.
And for the amateur, that confidence just evaporates.
Yeah.
Their faith and their strategy, their skills, gone.
And the reaction is often panic.
Yeah, panic mode kicks in. And
Yeah.
what do? They jump ship, start messing with the strategy, adding new indicators, changing things on the fly.
Or just abandoning the rules altogether, trying to somehow make back the losses really fast.
Precisely. And the guide is very clear. This is super dangerous. Chasing losses by throwing your plan out the window. That's how you dig a much, much deeper hole.
Leads to bigger and bigger losses usually.
Almost inevitably. The professional, though, they see streaks, both winning and losing, very differently.
How so?
They understand it's just short-term noise, statistical fluctuations. They trust their edge, their strategy, which they know works over the long run.
If they execute it consistently, through the wins and the losses.
Exactly. So they keep their cool. They don't let a drawdown dictate their actions or make them doubt everything. They stick to the rules, period.
No emotional meltdowns, no abandoning the plan.
Right. It's all about that emotional control, that long-term view based on their tested process.
So again, a question for reflection. When you hit a rough patch, what's your gut reaction? Do you panic, start changing everything, or do you trust your process and stay disciplined? Huge difference.
Huge. And digging even deeper into psychology, the guide tackles taking losses personally. This is a tough one.
Yeah, nobody likes being wrong, right?
Oh,
Especially with money involved.
absolutely not. And the amateur trader, the guide suggests, really struggles with accepting that a trade idea just didn't work out. They take it personally.
So what do as a trade moves against them towards their stop loss?
They start doing things they know they shouldn't. Sabotaging themselves, really, like moving the stop loss further away.
Yeah, giving it more room, which usually means more risk.
Or adding to the losing position, doubling down on something that's already proving to be wrong.
Oof. Or just removing the stop entirely, just hoping and praying it turns around.
Exactly. And the source material is pretty blunt here. It says if you're doing that stuff, you are as far away from becoming a professional trader as possible. It screams that you just can't accept being wrong.
Wow. Okay, so how does the pro handle this?
They operate based on two kind of counterintuitive principles, according to the guide. First, one trade is just one trade.
Meaning its outcome, win or lose, doesn't really matter in the grand scheme of things.
Precisely. It's statistically insignificant over hundreds or thousands of trades. It's just one data point.
Okay, and the second principle.
They see the stop loss differently. It's not a failure point to be dreaded. It's the predefined point where the idea was invalidated.
Ah, so it's the logical exit point, the place you want to get out once the reason for the trade is set.
Exactly. They accept they were wrong at that price, exit cleanly, preserve capital, and move on. There's always another opportunity.
So it flips the script. Accepting you're wrong quickly and efficiently is actually a professional trait.
That's what the guide argues, yes. So, do you find yourself fighting your stops, moving them, hating them, or do you see them as essential tools for risk management and just accepting the outcome?
Very powerful distinction. Okay, finally, point number 6. This one feels maybe foundational, it asks. Do you need money fast?
Yeah, this digs into the core motivation, doesn't it? The amateur often comes into trading with, well, unrealistic expectations.
Like seeing it as a get-rich-quick scheme, a shortcut to easy money.
Exactly. The primary objective is often just to make a lot of money really fast. They believe they can hit it big quickly.
And the source mentions research here.
It does. It references findings that traders with that get-rich-quick mindset, they're statistically the ones who lose the most.
Because that mindset leads to impatience, taking crazy risks, breaking rules.
All of the above. Their unrealistic expectations fuel all those bad habits we've been talking about.
So the professional,
Yeah.
what's their motivation, their perspective?
Completely different. They don't see trading as a lottery ticket or, a thrill ride for quick cash.
They treat it like a job, a serious profession.
Absolutely. Like being a doctor, an engineer, running any serious business. It requires dedication, skill, hard work.
What's fascinating there is that shift, isn't it? From seeing it as speculation, maybe even gambling.
To seeing it as a business, a demanding one that needs time, effort, continuous learning, hustling, just like any other profession, before you can realistically expect consistent results.
So thinking deeply, what's your real reason for trading? Is it that desire for fast money, the excitement, or are you genuinely prepared to treat it like a tough business that demands serious, sustained effort?
A fundamental question. So wrapping this up, the guide really hammers home that the big difference is that they're not about your account size or your computer setup.
No, it's all behavioral,
Yeah.
psychological, discipline, mindset.
It's about that laser focus, trading with a plan, managing the emotional roller coaster of wins and losses,
Accepting being wrong gracefully, using stop losses correctly.
and having that long-term professional perspective, seeing it as a business, not a casino.
And that concluding idea from the guide is pretty potent. Fake it until you make it.
Yeah, I like that. Don't wait until you feel like a pro trader or until you have huge success to start acting like one.
Start implementing these professional habits right now, today.
Exactly, because the guide stresses these are internal choices. Anyone can analyze their own behavior against these 6 points.
And start making those adjustments. It's within your control.
So the final thought to leave you with, if these pro habits are really just behavioral choices, things anyone can do, what's genuinely stopping you from making those changes right now? Forget your past results, forget your account size for a moment.
Yeah, in thinking about these 6 points we just covered, which one feels like the easiest first step for you? What single change could you commit to making starting today?